How's it going, everyone? It's Sam. For the last year and about a month, I've been adding $100 a week to this dividend and income growth portfolio. I've been consistently adding, and so far we have over $1,000 worth of gains. I want to go through it, talk to you about my top 3 holdings in here, and what this looks like in terms of dividend income and where it could go in the future. Now, I started this portfolio about a year ago, showing that you can dollar cost average over time and grow a large amount of wealth. Based on my own numbers, I should be able to hit about $1 million in this portfolio, assuming normal market returns, by the time that I'm 60. Actually, a little bit before I'm 60. That would produce an income around $36,000 a year, $40,000 a year. It depends what these dividend stocks do in the future and how much they raise their dividends, but that would be about what we would expect. So you don't have to go in and put thousands of dollars into some hype stock to make a big portfolio. I want to show that you could just dollar cost average over time. That's why I say this is $3,000 a month, because again, $1 million portfolio should produce around that if it is in solid dividend paying companies. So I've been doing this, like I said, for about a year, a little bit more than a year, and JT Wealth has been doing it with me. So they've been putting in $50, I've been putting in $100. Our gains are actually pretty similar. I have just about double the amount of gains that they have, and this has actually been a great investment account for me. So I've been growing my dividends, I've been growing my income, and I'll show you how it's broken down every month so you can see how much I'm gonna make this year on it. And I can show you how much we're up in different positions, like I said. Now, I am using M1 Finance for this. I think this is actually one of the best dividend portfolios that you can use, or one of the best brokers that you can use for dividend portfolios. The reason I say that is you can create a pie where you can create different balances or different weightings, and then you can throw in money and it just automatically disperses to those different stock holdings. The other thing is, once you turn on auto invest, it can just auto invest or drip invest your dividends, which is really useful if you're someone that doesn't want to look at it all the time. And it does focus on long-term investors, and dividends really should be long-term. You shouldn't be trying to get in and out of dividend stocks. And with this, you can only invest once a day, and then I actually upgrade to premium for free, and now I can invest 2 times a day. And that might sound like a really bad thing, but when you're looking for long-term investments, you shouldn't be trying to time the market that much. So that is why I used M1 Finance for this. If you guys want, you can put $100 on their platform and get $50 worth of bonus, link underneath the video. So like I said, I've been doing this for just over a year, and you can see that I've actually made a good amount of return on almost every one of these stocks, at least all of the ones I've had held for a while. How much do I make every single month? Well, you can see the breakdown here. I'm using Track Your Dividends. I don't have any relationship with them right now, but it is pretty useful. I just hooked up my account and I can see it all broken down here. I can see how much I'm gonna make in every single month. So you can see the October, January, April, and July months, I actually make a good amount. I make about $33. And I get, again, I realize that this is not huge money or anything like that. This is not a massive amount, but I'm also not picking out stocks that are necessarily paying the highest dividends. Like I said, Apple pays a pretty low dividend yield, or it has a pretty low dividend yield, and then Disney's not paying anything at all right now. But you can see that I'm still making about $39 plus 4, so 43. I'm making almost $200 a year in dividend income, and this will increase over time. So these months I make about $33, the other months 6, and then 4. Now, breaking down the top 3, let's take a look. Store Capital. Store Capital is interesting. They're my number 1 holding. I really like them as a company. They are a REIT, and they focus on long-term tenants that are not like Class A tenants, if that makes sense. They are not the Starbucks, they're not the Home Depots of the world. They're focusing on companies that are maybe a little less well known and that don't hold as much weight. They can't push against Store Capital as much. The reason I say that is, if you are a Starbucks, you don't give out the profit and loss for a certain location when you want to rent out a location. You hold so much power, you don't have to do that. So something like Ashley Furniture, they will have to give out to Store Capital the profit and loss for each specific location. That is great because Store Capital can actually rent to tenants that are making money, and they can tell how each single tenant is doing. Also, they can charge a little bit more too. They have more bargaining power. You can see that the revenues have been increasing. The top 3 stocks I have here are all pretty beautiful when you look at their income statements. Net income is increasing. Now, you can see that this year was pretty high, but you take that out and it has been pretty much increasing the whole time. There was, again, a little bit of a dip here during the pandemic, but you can see that we actually have to look at the FFO. So with REITs, you can't really look at net income because of the selling of properties and some other things that could throw off the net income. So FFO and AFFO, adjusted funds from operations and funds from operations, are really the best 2 things to look at. You can see that they are increasing pretty consistently the whole way through. We don't have really those dips that we saw in net income. So that is really good to see that we are just consistently gaining more and more funds from operations. And we can take a look at the dividends per share. You can see 2015, $1.04, then $1.12, $1.20, $1.28. So we're basically adding about 8 cents a year up until recently when we went through the pandemic. And now we're at $1.44. Overall, though, the payout ratio is fairly high, but this is a REIT, so that is expected. Now, their dividend per share is $1.44. The dividend yield is just over 4%. Moving on to the second top holding, we have Apple. Apple's one that I've been adding to more this year. The reason was it was stuck in about the same price range for a while. I started to buy it, I believe, right around 125. But you can see their revenues are just continuously increasing. The last year was fantastic, a great year for them. Their net income is increasing pretty drastically too, with a $30 billion bump this last year. Earnings per share increasing 60%. They're having blowout earnings. Their dividend per share is pretty low, so it's only 84 cents, but their payout ratio is only 17%. So they definitely have room to increase this in the future, and they have been increasing pretty quickly as time has gone on, about 4 to 6 or 7% every single year. So I think this will be a heavy dividend payer in the future. Honestly, they could be paying out $3 a share right now if they wanted to, which would put them closer to about a $2 or 2% yield. They are being a little bit cautious with it, so they're paying back their shareholders a little bit, but they still think that they have places that they can grow and money that would be better suited in the business. So they are paying a small dividend, but they are not paying a large dividend yet. If we look at their balance sheet though, it is really strong. They don't really need a lot of cash right now because they have $62 billion in cash. Now they've held on to more than that in the past. You can see that they were up to about 107 or so back in 2019, but they're still holding a good amount of cash. Then we have our third highest holding here, and that's JP Morgan Chase. So I don't really like JP Morgan Chase in the sense of manipulating markets, but that is just usually a small slap on the wrist. And they are at a very attractive valuation here. Their total revenue for the last 12 months was $128 billion. This increased from $102 billion, so they actually did quite well throughout the pandemic. You can see their net income did really well too, going up about 60%. Earnings per share went up to $15.02. Now this might come down a little bit in the future, but that is a significant amount. That puts them at a 10 price to earnings ratio. And they're sitting at $3.60 in terms of a dividend and only paying out about 26%. So that is about a 2.5% yield or so. So overall, these top 3 holdings don't necessarily pay me the most in dividends, but I think that these are attractive valuations for the companies and they will continue to grow their dividends over time. And if you guys want me to do more of this in the future, look at some of these other dividend payers, tell you maybe why I'm quite bullish on Vici, and I've actually added a good amount into a different portfolio, and I've been adding every single week for the last 3 weeks. Definitely let me know that down in the comments. Thank you guys so much for watching. Let me know what you think about this and whether you have a dividend portfolio. I know some people give me a hard time saying, oh, because the market's down, you're investing in dividends. I've been investing in dividends with $100 a week for over a year now. So I don't plan on stopping that anytime soon. I think it's a great way to build up some passive income. I know that it's not the biggest stream in the world, but this is also like a little bit of a piggy bank just in case something were to happen. I do have some extra cash. I don't plan on that by any means, but this is easy to get to. In addition to that, in M1 Finance, they actually are giving me margin, or they're giving me a loan against this portfolio. And I find it pretty safe. My portfolio would have to drop about 60% before I got margin called or anything like that. And it's at 2%. So I don't even really have a need for it right now, but I do have some of this money back into one of my accounts just because, hey, it's 2%. That's lower than a mortgage. It's like $2,000 that I have pulled out. If you guys want, you can check out M1 Finance underneath the video, get some free money, just deposit $100, $500 if it's in a retirement account, and then you can get that $50 bonus, and you can get great margin for 2% if you want. So thank you for watching. I really appreciate it, and I will see you in the next video. Bye.